increasing, and we have argued about that for a long, long time, that look, increasing the base of your bondholders is actually a good thing rather than narrowing the base of your bondholders. So, number one. Number two is that, India has, or any other country in the world, who go out and seek out capital, right, cannot possibly decide that there's one particular capital that I want. In this case of India, equity and FDI, etc. You have to sort of think about, what is the world offering you? If the world is interested in doing fixed income investments, then sorry, you have to allow them to do fixed income investment, right? And I think that if I go back and look at what China's experience has been over the last, I would say, about 14 months, and China will be entering the WIGB now in October. China's, I would say, financial system, given what's happening to regulatory side, given what's happening to the equity side, has essentially been resilient only because of bond flows. The amount of bond flows in China has been extraordinary. Okay. And I think one should take solace in the fact that, if things don't really turn out to be bad, you are going to get, certain, the flows are not going to be disruptive, et cetera, et cetera, et cetera. Having said that, I think it also does something that I think, for the lack of a better word, we haven't managed to do, which is to provide an additional source of fiscal discipline that we hadn't had. If you're going to force the buyers of your bonds to be only long all the time, which is what we have done over the last 70 years, there is no one who can short or no one who can take insurance against bad fiscal policy. Once you allow people who can actually short your bonds, I think there will be an added discipline. And again, that added discipline works. We have seen how other countries in the emerging market world has got, just neighboring country, Indonesia. Indonesia has managed to keep its fiscal deficit at below that 3% level for almost like 10, 12 years. And part of the reason is that, a significant amount of discipline has been imparted on Indonesian government and to keep fiscal deficit at that level because of the fear that, there is now a bunch of people who can actually take insurance and who can actually react to bad fiscal policy, right? Right now, there is nothing you can do because the only thing you can actually do is to go long bonds in India.
Perhaps right now, I would say the positives outweigh the negatives given our infrastructure funding needs. And once again, I would say, given what is going on in China, the entry of India, and I think we saw some recent note by a broker that only one particular set of Indian bonds may be eligible.
The 10-year. The 10-year, so the benchmark.
Yeah. So the amount of money that we may be attracting may not be that big because the overall size would be relatively limited. So, and given what's going on in China and given our own infrastructure spending plans that we discussed, on balance, I would say it's probably a positive thing. But I have my own personal views on whether bond markets ever really help an emerging economy achieve a higher capital formation and higher economic growth rates post inclusion in an index. Is there any formal study which can say for an emerging economy, this is the reality pre-inclusion into a bond index and post-inclusion into a bond index? Is there any formal study? Are you aware of it?
No,
that is what I'm asking all the people. Not so much because I'm a skeptic. I really would be very happy to know, for example, for Indonesia or Brazil or anybody, because we know from the experience of European economies in the 50s and 60s, bank funding did play a big role in their infrastructure investment needs and so on. And also, I'm a bit concerned about the shrinking horizons of financial market investors in general, whether it is equity or bond market.
Time horizons?
Shrinking horizons. I mean, the holding periods of a typical equity market investor used to be several years in the 50s and 60s and 70s. Now it is less than a year on average. So very seldom you have investors taking the long view. And if it is simply a case of a carry trade, for emerging market bond investors, given the likelihood of sort of perpetual low interest rates in the developed world, then I really wonder whether it would, in the long run, be a net positive or not. But I think in the short run, given the circumstances that are prevailing in the neighborhood, I would give it a cautious welcome.